Well, good afternoon. It is Friday, the 29th of March. I hope this finds you well, and welcome to our monthly update. And wow, hasn't the year been going by very quickly now that Easter is almost upon us? Anyway, today I'm going to chat to you about a few things, including market updates and what's around the corner in Australia. But before I get into that, many of you might notice that I am sporting a brand new pair of reading glasses. So I thought I'd share the story behind how I got the glasses. I've reviewed my private health insurance, which I've known for some time that the extras cover was not delivering our family any value. And so I made the decision to cancel it. And I'd suggest, as we're getting up to that time of year for everyone to renew their private health cover, to have a closer look at it. Print out a statement, understand what you've been able to claim throughout the year, and then weigh that up against the cost of the extras cover, if indeed you do have that option. Absolutely always have that top hospital there as a safety net, but the insurance companies make money on their extras cover. So prior to me cancelling my extras cover, I thought I'd have an eye test, and look what I came back with. Anyway, so I guess that's good that I was able to claim it, but also age is catching up. Anyway, on to markets. And well, March has been a really interesting month. In terms of the equity markets, things have leveled off after a really positive start to the year in January and February. But what the big news in markets is at the moment is bond yields. And most people don't pay attention to that. But when bond markets move, it is a sign that there's something big going on in global markets and their view on the global economy. And in Australia, the bond yield has fallen from over 2% at the beginning of the month down to 1.75%. And that's a massive drop. Now, what that is telling us is that there is a really pessimistic outlook in terms of Australia, but it's also a product of what's going on overseas and the about turn that the US Federal Reserve has taken on interest rates. It's also looking at the European Central Bank potentially starting quantitative easing again. That's printing money. German bonds are actually negative territory again. So we're starting to see a little bit of craziness come into global bond markets, and that's causing a few ructions around the place. And I think it's definitely something to watch closely. What does that mean? Lower interest rates. Lower interest rates, well, I think we might see the hunt for yield back on. And we've seen strong performances in our local market from listed property trusts and infrastructure stocks and anything that's more of a yield proxy as investors look for that income from their portfolios. Anyway, we'll be watching this space. On a bigger macro perspective, Brexit, the soap opera, continues. I'm not even going to predict how this is going to finish. If it goes to a no deal, then that is going to be the worst for Europe. It's going to be the worst for Britain, and it's certainly going to cause a lot of volatility in markets. Now, no one predicted that Britain would vote to leave the EU. No one's really predicting a no deal, but we've got to be careful about assuming these lowest probability events won't occur. The other thing is that we're looking at is obviously the ongoing discussions between the US and China and the trade negotiations. It looks like that's going to play out for a little bit longer, and you never know. With Donald Trump, things could also turn a bit hairy there very quickly. But on the converse, if we get a deal, that's going to be a real positive for markets to take a fair bit of uncertainty away and also take one of those breaks that are really starting to slow down things, particularly in China. I mean, overall, global growth is slowing. There's definitely fears that this has wider ramifications, but nevertheless, growth is still positive. The long-term charts show that we are late cycle and we need to be cautious, but at the moment, the signs of a pending recession really aren't quite there yet, but there's definitely some big moves going on. Closer to home, well, it's getting close to an election. That always increases uncertainty and a lot of promises by both sides of politics, and it's going to start next week with the budget. So Scott Morrison and Josh Frydenberg, they're probably going to pull a few rabbits out of the hat. We know that the government coffers are looking pretty good at the moment, and expect ScoMo and Josh Frydenberg to really sort of dish it out, particularly to middle income Australia, small business, in the way of tax cuts. And that's what we're going to see probably from both sides of politics, we're going to see increased spending. Obviously, Labor are coming to the election with a manifesto of a lot of increased taxes. So that will be a drag on the economy. But generally, when you see an election, you're going to see a fiscal stimulus, and that's going to be positive for the Australian economy in a time where we probably do need it a little bit to get through this period of uncertainty. So anyway, next week will be budget week. It's a little bit earlier than usual because of the election, and I look forward to updating you on developments there. Anyway, that's about it for the month. It's crazy where we are, getting close to Easter. And if I'm not speaking to you before, have a fantastic Easter break. And I look forward to seeing you soon. Bye for now.